Hello everyone, this is Andrew McNair from SWAN Capital with our July 2020 SWAN report. In this month's video, we're going to discuss some recent headlines that influenced the financial markets in June, but I also want to provide you some perspective of what these developments may mean for you over the next few months ahead as an investor. Now, as always, please stay tuned at the end of this video for some required disclosure statements. Now, stocks notched a solid gain in June, overcoming a rise of COVID-19 cases and fears of a slowdown in economic reopenings. Now, if we look at the three major indexes and we start with the Dow, it added 1.7%. The S&P 500, which is made up of 500 large U.S. companies, 1.8%. But the NASDAQ gained nearly 6%. The NASDAQ is primarily made up of technology companies, which really pushed it forward over the last month. Now, stocks climbed overall higher on a steady diet of positive news, including a report that there was an effective COVID treatment for critically ill patients being tested, and a talk of more fiscal stimulus, potentially another $1 trillion. Now, markets reversed late in the month on a surge of new infections because of the infection rate here in Florida, Texas, and California. That rattled traders with all that negativity with new cases. But stocks close out the month posting back-to-back gains to cement a solid showing for the stock market. See, assessing the economy has become more difficult due to the uncertainties caused by the pandemic. For example, May's employment report showed the economy added 2.5 million new jobs, while Wall Street economics were far off, predicting a drop of 8 million jobs the opposite direction. Now, economists are expected to look for more creative ways to measure activity, so they're increasingly turning to real-time data. For example, restaurant apps can help show whether people are returning to their old restaurant they used to visit on a frequent basis. We can track that information now in real time. And so traditional economic indicators remain vital, but expect a growing trend on new big data tools that will give these real-time snapshots. Now, as we head deeper into the summer, the markets will continue down a really reactionary path, most likely, and that's because they're alternating between positive data like last Thursday's job numbers and concerns of reopening and what potential new damage this virus could pose and has posed to our economy. As well as we're going to keep a focus on what it's going to do to our education system here in America. So we continually hold out for this elusive vaccine and that people are hoping for, but if deaths continue to decline, that will pose as good news for investors. That's it for this month's economic update. This is Andrew McNair signing off for the month of July 2020. But don't forget, we have our halftime report coming up on August 15th, and you don't want to miss it. It's an event where I'm going to unpack over a 6-month period what has happened for the economy and what we expect the next 6 months to look for. If you have any questions about this video, or if you have questions about your own portfolio, it's a perfect time to get a second opinion. And you can get that second opinion by just calling our office at 850-380-9558. That's 850-380-9558. See you next month.